What's up, ReFi Nation? This is Simar with my dear friend John over here. For today's episode, we've got Dana and Phil from Flowcarbon talking about the voluntary carbon market, all the amazing work that they're doing supporting project developers on the ground, and the new Centrifuge pools that they just launched, some really interesting, cool structured finance tools on how we can get more capital to on-the-ground project developers and generate, a real impact towards the climate emergency. John, what are some of the things you're sitting with, pondering on, taking away?
Dude, I'm excited. I've been curious about what happens with Flowcarbon for a while. They've kind of been like this big but looming force that hasn't really materialized in the space. And it's great to hear them leaning so deeply into the public consultation with all the different voluntary carbon market participants, and also working in the background on launching these centrifuge pools for these carbon forward contracts and seeing material progress there that isn't limited by the decisions of the legacy market. And that just feels really satisfying to see ReFi making progress in multiple fronts. We also saw Thallo last week launch their two-way bridge, and we didn't get a chance to go into the Flowcarbon's positioning in the market in any depth, but I'm increasingly optimistic. I hope that over the next 6 months, as Phil says, we'll see a kind of opening of the floodgates, some specific rules of registry saying this is how you tokenize our assets, and boom, we've got a whole nother era ahead of us of liquid supply of carbon credits coming on chain and flowing off chain to maintain an efficient market. For those listening, episode dropping in sec. If you enjoyed this one, drop us a review, share with a friend. Let's get the story of regeneration out to the masses. And as always, Simar, great jamming with you. Thanks for this. It's always fun hanging out. And here we go, Dana and Phil. Hey, good morning, Dana. Thanks so much for jumping on. I know you just got after a long flight. How you feeling this morning?
I am refreshed, ready to go. It was only a 12-hour flight with 3 kids, so no big deal.
Legend. Phil, you've been on a similar adventure. What's going on at SF, man? How you feeling today?
I'm feeling great. Got a lot of stuff going on today. Super excited.
Great, man. Well, Simar and I are super excited to speak with you guys. We know ins and outs about what y'all are up to, but for some of the people tuning in who don't know as much about Flowcarbon, maybe you can kick us off, Dana, just give a quick overview of what Flowcarbon is, and then we can start to unpack your kind of theory of change and the reason why you've decided to do this venture.
Yeah, absolutely. So Flowcarbon is a company that was incepted to help scale what's called the voluntary carbon market, which I'm assuming many of your listeners know what it is, but if they don't, it's the market that facilitates carbon reduction and removal projects by issuing them credits that can be sold to buyers, essentially. And we think this is an essential market from a climate solution standpoint. It can deliver something like 30% of the overall solution to climate change that we all want to see, in addition to preserving and enhancing super important ecosystems for biodiversity, for local communities, often in the developing world, et cetera. So we think these are essential projects, and this is the market that facilitates them. However, it's a market that has not experienced the scale and growth that it could due to a bunch of systemic challenges that it has faced. And Flowcarbon was incepted to address 2 of those challenges specifically. One is the fact that these projects, which are oftentimes in nature, conservation, afforestation, reforestation, et cetera, they are capital intensive to get off the ground, but can take 2 to 3 years to become certified and get credits issued, which they can sell for revenue. And so we are super excited to facilitate early and efficient capital to project developers so that more projects can get done. And so that's one main area of focus for Flowcarbon. The second is the spot market in which the ultimate carbon credits are transacted. It has historically been very opaque and non-transparent, conducted over the counter primarily. And we think that critical to scaling the market is having transparency, price discoverability, and so we're committed to that as well. Now, to address these 2 challenges, which is why we incepted the company, we quickly recognized that blockchain as a technology tool can be the right infrastructure layer to build solutions addressing both of these. And I'm sure we'll dive into what those are. And so we are a company that is leveraging blockchain tech in addition to other tech tools to address these two challenge points in the voluntary carbon market.
And is that how you got involved, Phil? Curious to hear kind of a bit about your background and how you and Dana met and your contribution into this space.
Yeah, for sure. So I got involved in the blockchain space in around 2011, started tracking Bitcoin and started paying attention to the space pretty carefully. And then in around 2016, 2017, got involved in the impact blockchain space. And at the time, that really was focused on the transition to proof of stake. And I remember at the time being laughed out of rooms when I was starting to start a staking as a service company. That people were just like, no, proof of stake is never going to be a thing. Ethereum's never going to merge. So really excited to actually see that come true after 5 years of sort of working in that area. Really excited about that. And in 2020, during what was called DeFi summer, when there was just a boom of stuff going on in the DeFi space, and especially around stablecoins, I had just read Sacred Economics by Charles Eisenstein. And I got this idea of saying, can we actually create a green stablecoin? And I was working on a project at the time that was called Bitcoin Green or BitGreen, not to be confused with the new BitGreen that's out there today, and started thinking about what could you put inside of a green stablecoin. And started really thinking about it. And then I went down a rabbit hole of what kind of natural capital could come on chain and came across carbon credits, went down the deep, dark rabbit hole around carbon credits and discovered that this was like the perfect asset to come on chain. And this was a great use case for blockchain because it solves so many of the fundamental problems that exist in the voluntary carbon market from day one: transparency, access, price discovery, additional capital sources. And then you could maybe even build a stable coin on top of that. And so it was really interesting to see that. That's sort of when I first came into discovered the Celo ecosystem, and looked around in a bunch of places. And then about 6-9 months into my rabbit hole, I got a call from a friend of mine who said, hey, do you know anything? You're our go-to Web3 guy. Do you know anything about carbon credits or know anyone who knows anything about carbon credits on chain? And I was like, well, turns out that I do. And that's, and I've known Dana and Lini for over a decade. And so that's sort of how we got together to work on this project.
That's so fun. Dana, could you share a little bit about your background too, and maybe some of your personal journey before you got to Flowcarbon as well?
Sure. So I am a lawyer by training. I actually focused on national security law. I worked at the court that oversees our foreign intelligence gathering, which means that I have spent a fair bit of time in a space where technology was being utilized and the legal and regulatory questions about the use of new technology were I would say, evolving together with the use of the technology. That was something that we see in all cases across the board in national security and intelligence. And it was kind of really exciting for me because I was engaging with these technologies, but on the legal side. And I then started a software company together with Lini, who Phil just referenced, who's our COO. And we started a AI-powered chatbot technology platform at precisely a moment when privacy and communications laws were evolving to adjust to the reality of having AI-powered chatbots engaging with humans. And so again, it was a really fun and interesting place to be, building a technology tool where the legal was evolving at the same time. And so I think I kind of really like this sort of area. But anyway, we worked on that platform and sold it to a private equity fund in 2020, and then had the ability to get involved in environmental philanthropy together with some other folks that we knew, in particular on a specific project that was happening in South America. And the truth is that getting involved in environmental work from the philanthropic standpoint is certainly sort of rewarding, but also very disheartening because you see the reliance on philanthropy capital to effectuate these projects, and you see how utterly insufficient it is, which is why we have these alarming stats like the famous one, which is one football field worth of old growth rainforest is being destroyed every 6 seconds. So we are slashing and burning our rainforests and other critical ecosystems because we don't have the capital in place to preserve it. And so getting involved in that project led to a deep dive into what the really only other alternative source of funding could be for these essential projects. These projects are super essential because, like I said earlier, they can provide up to 30% of the solution to climate change. They also preserving ecosystems so they're our most scalable and cost-effective carbon sinks. And so as we think about global decarbonization, it makes no sense to allow the continual destruction of our natural carbon sinks. That's, just perpetuating the problem. It's a major source of emissions. And so the only other economically viable mechanism for dealing with this problem was the voluntary carbon market, which I discovered at that time. Became really fascinated by this market and just spoke to as many people as I could about it. Did my own deep dive. Phil described his rabbit hole on carbon credits. I did I went down a similar rabbit hole on the market overall because I was really enamored with what it could effectuate and the potential it had from an impact standpoint, and was curious as to why it wasn't, why did I just discover it in 2020? Why isn't this a market that is more visible, bigger, growing more rapidly as we all, our collective conscious around decarbonization and climate change is elevated? Why isn't this market, which is such an elegant solution, similarly growing? And the answer is it has a couple of challenges that are solvable. And so we incepted Flowcarbon to solve some of those challenges.
I think we all come at this from the how do you scale this market and how do you create efficiencies in the market in order to scale it. And part of the big problem is there just hasn't been traditional market efficiencies. And prior to getting involved in blockchain, I was a student of financial markets and specifically of arbitrage. And to me, that is what's absolutely missing in this market and why we need to create technological solutions that allow for that efficiency to come into place. One of the things that everyone talks about and has been talked about for years is that in order to get people to think about how they pollute, you have to actually put a price on pollution. And so you have to have that. And so in certain cap and trade schemes, you have that. But places where you don't have cap and trade schemes, where you have just, the corporates doing this voluntarily, they're doing it without a price. And so no one knows what the price of polluting is. And part of the problem in the current voluntary carbon market is price discovery is very difficult. There's lots of different kinds of carbon credits. They all have different prices and they all have incredibly wide spreads. And in financial markets, when you have an asset that has wide spreads, that usually doesn't last very long, right? It's this secret that only you know about and you exploit that secret for as long as possible, right? If I'm able to buy something at $10 and resell it to you at $12 and make a 20% spread on it, right? I'm going to do that all day long. And in fact, I'm going to keep doing that even as that spread compresses down to 10%, 5%, 2%, 1%, 0.5%. But in the voluntary carbon market, that compression of spreads hasn't happened as rapidly as it does in other markets. It's sort of like there's gatekeepers and secrets that everyone has, knowing, oh, I know the real information. I have true price discovery on my end, but the market buyers don't have as much price discovery. So in order to do that, you have to remove that information asymmetry and create true price discovery. And the way you do that is by letting people who have that information, right, access the market in real time and in public with transparency. And so all of a sudden, you'll start seeing those spreads compress and buyers and sellers are then able to meet at real-time pricing. And so you see that, like if you think about equities markets, right? The spreads in equities market are a penny wide at most, right? And that's it. And that's because the arbitrage that goes on to actually real-time price and price in all the information that's available on an equity, like Apple stock, is available to everybody and everyone plays in that market with financial tools that allow them to mitigate risk and take risk positions like options, like futures contracts, et cetera. You can do those. In the carbon market, none of that exists. There's no ability currently to short the market. There are very limited futures products that have very low volume. There are no options. There are no sort of derivative products. And the ability to even trade on these products themselves is kept to a very limited group of people. And so opening up access to that will allow for price discovery and efficiency to take place so that if someone then wants to pollute, it's very clear to them, okay, pollution is going to cost me X dollars a ton of pollution. Not, well, maybe I can get away with it being $2 a ton if I do it this way versus $9 a ton if I do it that way, right? That sort of is what ultimately has to end. And not all of that is a function of markets being efficient. Some of that is a function of the entire industry or industry subgroups getting together and saying, these are the kind of carbon credits that you can use to actually abate your pollution.
And at a kind of empirical level, the impact is that when the cost of pollution isn't accurately reflected, we're destroying the natural world that we need to survive, to power these supply chains, to keep society rolling. And so there's kind of like this intrinsic cost or intrinsic value of preserving nature or destroying nature that we're also trying to adjust against. I think there's a lot of different avenues we could explore down here, but I'd love to shift and talk about Flowcarbon's particular solution and the architecture you guys have chosen. I obviously found out about you while I was working at Toucan and was really interested in this idea of a two-way bridge and looking at the considerations you've made specifically for the corporate market, but also recognizing what the Web3 kind of builder space and DAO space needs to make this a product that works for them. Can you guys open up what your solution is, how it works, and some of the key decisions you've made to facilitate this market to emerge and to scale?
Sure. What a two-way bridge means is that basically you can take carbon credits, which exist off-chain. You can create tokens that are backed by these carbon credits, which allow the basically legal interest in the carbon credit to trade freely, much more freely than they can, but without tokenization. But that the credits themselves are aggregated in a some sort of custodial account that we maintain. And it allows for a lot of the innovation that Phil just described. For starters, most obviously, it allows for transacting through tokens, which happens on exchanges and dexes where there's clear price transparency. So everybody's accessing these units at the same time, at the same price. They can also do so in any amount. So you can bring in the whole retail market, SMB market, mid-level corporate market who buy in smaller amounts. And so they have a really difficult time navigating the off-chain broker-led market because in addition to the lack of price transparency and discoverability, they can't buy in small amounts. So like any of us on this call, we cannot custody a carbon credit because we don't have the right registry accounts to do so. And also because if we want to buy to offset a flight, you can't really buy one credit. No broker is going to sell you 1 or 2 or 10 or 100 credits. So we believe that taking these units and creating tokens backed by them, which are really like basically tokenized versions of an asset or a commodity, makes a lot of sense. The two-way bridge component means that if you're the token holder, you have all the functionality that's associated with the underlying credit, which means at any time you can retire it. It is live and unretired. So for those of you not familiar with the market, carbon credits are sold. And they represent a right to retire the carbon credit and then claim the environmental benefit, also known as an offset, associated with that credit. And so any token holder has the same right. They can retire the token at any time, which means that we will retire the underlying carbon credit and they can claim the associated offset or environmental benefit. They can also trade in the token for an actual carbon credit. That's sort of the notion of the two-way bridge, which means that if you're the token holder, you can bring it to us and actually take possession or custody of an underlying carbon credit. And so that's really important for creating interoperability between the on and off-chain carbon markets. It means that they won't be functioning separately in separate universes from one another, and it means that some of the more speculative on-chain activity can be tempered because you can have the entire off-chain community of project developers and brokers and those who participating in the tokenized version. So that's what a two-way bridge. So we architected that for 2 reasons. One, because we thought we view this as making by far the most sense as an economic solution. And 2, carbon credits right now, the way that they are issued is as off-chain assets. They are database entries and registries at market recognized standards that create carbon credits. And there's 4 main ones. And so you have to bridge them on chain. So that's the notion of bridging. And the two-way bridge means you can also take them back off chain, which we think makes all of the sense in the world from an efficient market standpoint. Phil, you want to add anything?
Yeah, just to go back to just the example of how this would work in a two-way bridge scenario, right? So if you have a carbon credit on chain that's trading at $10 and a broker that's off chain that exists in the off chain market says, oh, $10 is a great price for me to buy because I can sell them off chain at $12, they will buy them up on chain $10, $10.50, $11, $11.50, all the way up to $12 because they know that they can sell them and take them off chain to do that. Same thing on the other side, right? And the other side of the market works the same way. Is then if a carbon credit on chain is trading at $12 and a broker's like, well, that's only worth $10, right? They will bring them on chain, sell them at 12, sell them at 11, all the way down. And eventually you will, because you have multiple participants doing this, you will arrive at a fair market price for carbon credits.
Which I'll add, in addition to being a virtue in and of itself and very like super important for the market, it also is directly tied to our goal of enabling more projects to be financed. Because once you have a market for carbon credits that enables price discovery, the number one challenge we hear from project developers in association with the challenges they have getting financed is that there's no price discovery for the credits. And so that makes it super difficult to underwrite the projects and invest in new projects. If there's just a clear, transparent, efficient market for different kinds of carbon credits, and again, of course, for those sophisticated listeners, yes, there's many different kinds of carbon credits, and the market will have to find the right balance between standardization and fungibility on the one hand, and the unique characteristics of different kinds of carbon credits on the other. I think this is a market-wide conversation that's happening, and I think different market mechanisms, including tokenization, will enable those forces to come together to sort of solve that equilibrium. But the number one challenge they have is having any kind of price discoverability and transparency such that they can finance new projects. And so it's directly in service of seeing more projects done.
Which I guess is actually a really good segue into sort of what the other stuff we're working on, which is project finance and how do we direct capital directly back to projects, right? The spot market is really about secondary trading, mostly about secondary trading and the selling of credits once they're created. But we are actually hyper-focused as well on how do we drive money directly to projects that need money on the ground in order to get started or to continue doing the work they're doing. And to that end, we've actually brought the first forward contract on chain. A little over 6 weeks ago, we launched our first Centrifuge pool. So Centrifuge is a protocol for bringing real world assets, mostly in the form of contracts, on chain and creating structured products on them. And so we actually launched our pool. Its initial, our primary first pool that we did was built around a single project that's in Paraguay. It's in the Chaco region. And Chaco is one of the largest carbon sinks in the world. It ranks as one of the most deforested forest areas in the world as well. And it was actually, I think Sir David Attenborough said that it's one of the last great wilderness areas in the world. And so this is the first issuance of credits from this project. And so we bought those credits forward. So we basically bought them at a discount to what we perceived spot prices would be when we bought them. And then we then put them into the Centrifuge pool. And then we created two assets on top of that. So two tranches of investment. The senior or the drop token gets paid a fixed rate of return. You can think of it as if it was a bond or debt. It gets paid just straight a fixed rate of return. The junior, on the other hand, or the tin token, actually earns a variable rate of return. And that means that if the project, so if you go out and sell this in the market and we sell it at a premium or we get more than we paid for it and more than that senior rate of return was, the tin token can do incredibly well. It can have ROIs that are very, very high. On the other hand, if the project doesn't do as well and the market doesn't do as well, that actually can be impaired. Your capital can be impaired. And the junior tranche takes the first losses, so it has that equity-like component, and then the senior tranche always gets the first thing. And the reason that we're doing this in an on-chain vehicle is twofold. One, we think that the entire value chain for carbon credits is going to move on chain. And so from the creation of credits ultimately to this trading of credits. And so doing the financing on chain makes a lot of sense, because doing it with smart contracts then mean that this can all be auto executing, right? The waterfall is fulfilled in this senior junior is fulfilled by a smart contract. And so you can actually at times once eventually create the entire contract for the forward instrument on chain, have the credits when those credits are issued, they're delivered in the form of tokens, and the whole thing is automated without human involvement at all. It's all done by smart contracts. So we think that's awesome. Second, we actually think that this is an opportunity for Web3 to really make a difference and have a real impact in climate change, because we think that there are Web3 treasuries, we think there are stablecoins, we think there are DAOs, all sorts of Web3 projects that have capital that they can allocate. This is an amazing vehicle for allocating that capital, and to actually allocate it in a way where the money is going directly to projects on the ground, and you hopefully will see a financial return. We actually think that you can see a potentially very big financial return or a fixed return depending on which pool you choose to invest in. And so we're really excited about the opportunity this presents for Web3 to come together and show the impact that it can actually have.
That's amazing. And just sort of building on that, Phil, so on the supply and the demand side, on both sides, maybe could you speak a little bit, and both of you guys speak, a little bit more about the project developers that sort of are coming on, who what kinds of projects these are, what kind of work they're doing on the ground, and sort of what's surfacing these credits. And then maybe also you could touch a little bit too. I know you touched upon this on the Web3 community side, but like what kind of demand is coming in? What are some of the motivations there? What are they looking for? What kinds of capital is flowing into these projects, and to these pools?
I'll start by saying that I've read a lot of different reports on this, but something like $700 billion worth of capital needs to flow into nature-based solutions in order to help us achieve the 1.5 degree pathway from the Paris Agreement. And
if you go beyond nature-based, it's $4 trillion.
Yeah. But even just for nature. So something like $800 billion of capital. And yet it is very difficult to deploy that capital because these projects, which are so incredibly compelling from an impact standpoint, are nonetheless difficult to underwrite because they're often in the developing world. They often are subject to a lot of local on the ground that sort of unique considerations and fluctuations. There's climate risk associated with them, fires, et cetera. There's a lot of risk involved in these projects. And so a lot of the capital that is intended to flow into these kinds of solutions are only chasing the projects that are sort of the lowest risk profile and the largest volume. Right? Because that's where the ROI is something that most traditional investors are comfortable with. However, much of the impact that we need to see on the ground in the form of projects comes from smaller projects. I won't even say higher risk projects. It's more projects that can't easily be bucketed into these risk parameters because the data is less available, or the project is smaller, and so the ROI potential is much smaller. And so what we have is essentially an opportunity for smaller project developers, which we think it represents a tremendous amount of climate action coupled with real biodiversity and local benefits. Like these are some of the most impactful projects available to be done. It's an opportunity for them to get financing because it's sort of platformized. So it gives them access to this financing solution, which has been totally validated because just from the sort of the initial pool that we did with Centrifuge, we've been inundated by project developers, small, large, but we're really excited about the smaller ones who are interested in utilizing this solution. They don't have the ability to go do a bilateral fundraising process. And even if they did, they wouldn't necessarily fit into the return profiles that traditional investors want to see. And so they don't have solutions. And so they either don't do the projects or they strike whatever deals they have available to them, which are often unfavorable and limit the impact that the project could have. And certainly the capital going back to the project developer. So it's been really cool to see.
Just maybe share a little bit, just maybe some specific examples of kinds of small projects that, sort of when you're talking about small projects, like what kinds of projects are those? What are we seeing? What kind of work are they doing on the ground?
Yeah, it could be anything. There's a lot of smaller blue carbon projects, mangrove preservation and restoration projects. There's some newer methodologies like biochar projects. There are much smaller conservation projects, so avoided deforestation projects that are just on the smaller side. So investors tend to like avoided deforestation projects because they have immediate yield. At least once you get the project certified, again, it takes a while, but once you have the project certified and issuance is coming, if you have a large land area, it's higher volume. So the majority of the credits in the market right now come from renewable energy projects or avoided deforestation projects. But by contrast, if you have a small conservation project where the threat is real, so the additionality is there, but you need to pay a lot upfront to secure the land asset in whatever way you're doing it, and then to do pre-feasibility, feasibility studies, get the carbon development done, get certification. This is a lot of capital. And so it's even smaller avoided deforestation projects.
I'd love to go into when you guys are going to launch. It seemed as though you were ready a while ago. You raised a really significant round led by 16Z. You've got, $38 million of pre-purchases for GNT, which is a very high quality carbon credit, but you haven't gone live yet. What's going on behind the scenes and what can we expect?
Yeah, so I think what's been phenomenal and exciting to see is that the voluntary carbon market, which is a self-governing market, basically there's a number of really important institutions within the market that kind of drive policy for this market, but it's not a market that's subject to any kind of regulation or legislation, and so it's a self-governing market. They have leaned into tokenization in a real way. And so a bunch of these critical institutions have processes going right now where they are formally, in accordance with their formal decision-making processes, figuring out the specific frameworks and rules under which they will enable the tokenization of their units. And so three of the four main carbon crediting standards, Vera, Gold Standard, and American Carbon Registry, all have public or private consultations going on right now that Flowcarbon is heavily, heavily involved in. AIDA, which is the sort of main, I would say, policy, it's a trade association, but it's a sort of main policy driving institution in the market, has a drafting group on tokenization. And so it's super exciting to see basically an entire market coming together to think about how to most effectively leverage blockchain tech for tokenization and beyond. There's other utilizations of blockchain tech to the market as well. And so right now, Flowcarbon, from a tech and legal standpoint, we've been ready to go for a long time to mint tokens and deliver them that are backed by carbon credits. But to engage directly with the standards that create these carbon credits and other super important bodies like AIDA, where we're a member and we're on the group that's working on this, is I think a huge opportunity. It's a massive opportunity, I think, for the movement to tackle climate change, like for the broader decarbonization and climate change community. And so we're super excited to be leaning into those processes and to be a resource and a sort of participant with these market institutions as they think this through. And so that's what we're focused on right now, and are super excited that the market is where it is right now.
And while the GNT token may not have launched yet, we did launch the first Centrifuge pool. And that's, in some ways way more exciting. The tokenization of carbon credits is necessary infrastructure. And there's a lot of people working on how to build that correctly. And there's a lot of mind share going into that. But we're really excited that we can actually help money go directly to projects and hopefully scale that relatively quickly into tens, if not hundreds of millions of dollars.
Absolutely. And yeah, I think I'd be curious to look a little bit more towards the future of like what's possible once these pools are live and large capitals flowing into it, what can be built upon it, what are the use cases. But before we do that, I just want to kind of understand your guys' read on the sea change that's happening here, because it seemed like there was this universe of enthusiasm around KlimaDAO and Toucan, a bunch of credits flowed on chain. One out of every 4 credits over, a certain time period was bridged via Toucan. And then Vera obviously came in with the public announcement in May and said, like, we're prohibiting the tokenization of retired credits. What do you guys think is going on behind the scenes? Is it just that, yes, they're convinced that blockchain is a critical piece of technology to allow this to scale, but they just need to figure it out? Or do you actually feel like there's an undercurrent that's pushing back against this technology and we might see, not wholesale adoption of, blockchain as a space?
No, I think it's the former. It's pretty clearly the former. I mean, even if you read the gold standard public consultation doc, it says like we are basically just coming up with the rules under which we will enable tokenization. So I think basically this is a very collaborative market. It's a small market. The market itself, by the way, $2 billion this year, $300 million in 2018, tiny market that is poised for really has seen thus far growth by orders of magnitude and is poised for like something like a 10 to 15x growth in the next decade. And so I think it makes total sense that on the cusp of this kind of growth, the market, again, a small community of people and institutions is coming together and saying like, we are all together about to experience growth that could lead to tremendous climate impact. Let's make sure that the underlying frameworks through which some of this is happening, meaning if it's happening on chain through tokens, let's like all align and make sure that all T's are crossed and all I's are dotted. This is a market where integrity matters a lot. We haven't talked about that. I talk about that on most talks that I do. This is a market where credibility and integrity is super important. And so I think any major shift, for example, if you're going to be tokenizing credits from this market and trying to move the market on chain, it's got to be done with the utmost integrity and really taking into account credibility questions. And that means collaborating with the stakeholders in the market that are experts in this, that have sort of built the traditional legacy institutions that are addressing quality questions right now. You can't do this in a way that, it shouldn't be done in a way that's disconnected, rather totally in collaboration with market institutions. And so I think that's what's happening now. The first stage of this was doing it separately, demonstrating the power, which certainly the early efforts did, demonstrating the potential volume. And now the second phase is doing it in collaboration with market stakeholders so that it's done, I think as properly as possible.
Yeah, and if you think about what the standards actually are, they're not technologists, right? What we're proposing is a massive technology upgrade to the way that they issue and deal with credits. And so for them to get a grasp on what it is that we're talking about is just taking a little bit of time. And it's healthy. It's good that they are actually digging in. And if you look at the public consultations and working groups, especially from Gold Standard, they are digging into the power of blockchain and the power of Web3 in a way that is really remarkable. They really are digging in all the way down, looking at every possible way that this can be used, not just for the tokenization and trading of carbon credits, but beyond that to scale the market, to set price floors, et cetera. They're thinking through all of these really complicated and interesting use cases and innovative ways of working in Web3. And so they're really digging in and trying to understand the full picture. And that's amazing. And so I'm actually really optimistic and excited that this is going to be, we're going to see this be one of the first industries and one of the first asset classes to fully move on chain, and have an entire industry move there in that direction is pretty powerful.
Yeah, just to build on that, when we were with, we had Benoit from Vera over on the podcast, and it just was very clear that like integrity, to your point, Dana, is really important. And it's not a matter of like the technology, it's doing so in a way that is like building trust and, it just these components of just them wrapping their mind around it. So I think just to build on that, I feel like that's something that, John, you and I have been seeing too across our podcast is like, there is openness and it's just a matter of like being in integrity and doing this in a way that's like continues to build trust with the broader community and brings high quality assets online.
I think that for those who have delved deeply into the carbon markets and the use of blockchain to this market, it becomes pretty clear that this is blockchain and tokenization are directly beneficial tools for these specific challenges in this market. Meaning there's almost like, we talk about product market fit, there's solution market fit to this particular market and its specific challenges with this technology for a whole variety of reasons, some of which we've covered in this episode. And so that's why it's so exciting. And that's, I think, why the industry is really taking up this question, because there have been challenges that have historically prevented the market from scaling. We don't have the luxury of time figuring it out. This is a solution that can address these challenges and do so really quickly.
Well said. And just a remainder of our time here, I'm curious, Phil, cast vision in terms of where this goes in a best case scenario for you guys, best case scenario for the market, for the planet. What happens here over the next 6, 12, 18 months, and what kind of things will be possible once the likes of Flowcarbon are out into the wild?
Yeah, so I think I'm very hopeful that in the next 6 months, we will see live tokenized markets, and there'll be live trading in tokenized markets. There'll be more access to the markets. And what that will then unlock is the ability to do more project finance, because it will become more and more automated in order to basically do what we're doing with the centrifuge pools, where those credits come in after they're issued, and there's a market to sell them into immediately. And that will enable more efficient use of capital, because you won't necessarily have to hold on to prepayment dollars, which we didn't really talk about, but part of the structure that we do in these centrifuge pools is we pay the project developers most of the money up front, but not all of it. And then when they deliver, they get paid the rest. And so that money in the current iterations of these pools is actually sitting in cash, which actually makes the senior investment even more secure, because there's actually cash sitting there for them to, if the credits say don't deliver, right? They don't actually lose all of their money. But over time, as this process gets better and we can build in reputation scoring and have more people plugging into the system, you can actually more efficiently deploy capital, because when there's a liquid market, you don't necessarily need to keep that cash there in order to do it. But what I think is going to happen is there's going to be V2 and V3 sort of the centrifuge pools. And so some of what that looks like is additional tranches. So having the ability not just to have a senior and a junior, but to have also mezzanine-like tranches where it's a combination where you get a little bit of upside in exchange for different interest rates. And so there's the ability to do that. There's also the ability for us to actually turn these into essentially carbon annuities, which would mean that instead of the waterfalls when they're distributed back into the pools and you get cash paid back to the investors can opt to have credits given back to them instead of cash. And so this would allow for a corporate, for example, to invest in a pool and then get a stream of credits that are paid back to them over time.
Sick.
Right. And so the same thing for any investor who maybe doesn't necessarily says, okay, great, I want to invest in carbon credits. I want to do this. This is a great investment, but I actually want to keep the credits and hold on to them, or I want to use them for offsetting. So that's a really nice thing. And then there is all of the interoperability with other ReFi protocols that are being built. And so on the supply side, there are protocols like Ivy and Green Trade, which are getting into the project origination game. So what they're doing is, this is similar to also what BitGreen is doing, where they're going out and talking directly to projects and people who have land concessions or indigenous communities and saying, we can help you get a carbon project started. And then they can actually bring that carbon project to these pools in order to get financing. And then on the other side of that, once these pools are up and running, you have the ability to do something like what Solid World is doing. Solid World is proposing to have liquid forward markets, right? So where you could actually liquidly, publicly trade forward contracts. And so what that would allow is for once, these pools are put together, they go and invest directly in projects. And then if there's a good price return, they can be sold. And again, remember there's this liquidity premium that you get in the market. So liquid things that generally do trade at a slightly higher value. So you can actually make a return by taking these illiquid forward contracts, selling them into these pools, making them liquid, taking that capital and immediately redeploying it back into new projects on the ground. And so then what that even further allows you to do is to package and repackage and tranche these into financial securities over and over again. And the reason why that's important, right? And I know that people sometimes have a little PTSD about repackaging and packaging securities from the mortgage crisis, but when it's done on chain, right, you actually don't have all the problems of illiquidity and lack of transparency as to where those investments go. And so that is, if we're going to actually move $4 trillion into climate solutions, you absolutely need to massively financialize these things.
Bam. Love it. Thank you guys. It's so powerful. I can't wait to see the 6 months ahead. We've got decades to come. For those who've listened and tuned in and want to get involved with what you're doing, what's the call to action? What can people do to get involved in the work? Dana, I'll leave that with you.
So I think it's twofold. One is any accredited investor that wants to have real impact can, go on Centrifuge and see what we're doing there, and get in touch with us there. Secondly, is you have a very sophisticated audience, as I've said earlier, and to the extent there's folks listening who have thoughts on tokenization and have a point of view on blockchain and how it can contribute to this market that's informed and they're able to articulate it, they should certainly submit to the public consultations that Vera is running, that Gold Standard is running. Vera's is going through November 2nd. Gold Standard is going through October 28th. And they should definitely get involved and make their voice known because, I think the more voices, again, educated, well-informed voices that can articulate both the benefits, raise the important questions, and be part of the conversation, the more, the overall conversation is advanced.
And beyond just individual investors who are accredited in the United States or not accredited outside the United States can participate in Centrifuge pools. One of many reasons that we decided to work with Centrifuge is those vehicles are actually set up to work really well and easily with totally decentralized organizations. So DAOs such as MakerDAO have been able to invest in Centrifuge pools in the past. So if you're a Web3 treasury or Web3 community or a DAO that wants to have a real climate impact, we would love to have you be involved in sort of the expansion of these pools that we're doing in the next quarter.
There we
Amazing.
go. Thanks, guys. It's been such a pleasure. Phil, I know you got to talk. Go smash it, homie, like you always do. Dana, it's been an absolute pleasure getting to hang out as always. And yeah, really grateful to have you guys on and can't wait to see what comes over the next period of time and have a good rest of your day.
Thanks, John.
Thank you. Thanks for having us.